absolutely seeing an increased focus on operational due diligence. At Kinetic Partners, our clients and our institutional investor clients have certainly raised the bar and increased the level of scrutiny that they're applying to their underlying managers, the investments that they're making. So we're helping institutional investors not only augment their existing teams, and in some cases those teams are quite robust, but also for some of those groups, as well as other investors, help them develop and design proper techniques to interview investment advisors and to really do a deep dive into some of the controls that are existent at those managers, or the lack thereof. So some of the things I think that are taking on an increased importance in the process are asset verification. So whereas previously there might have been some verification of assets through a review of audited statements, now it's going deeper and actually reaching out directly to counterparties and prime brokers and the like. Certainly valuation is an important issue, and the policies and procedures around that and the testing around that. And then finally, I would say really just an overall understanding of the interplay or connectivity of the service providers. So the connectivity and communication between an administrator, an investment advisor, their prime broker, and their counterparties, and how that's designed, the controls in place, and I think more importantly, how any changes in those processes are handled and how any changes are documented. So while you can get it right initially, it's really the ability for an investment advisor to manage that process going forward and to fold in sort of changes or new issues, new products that might be traded. So again, in summary, we're seeing definitely more focus on it from an operational perspective. I would say it's easily brought up to the same level as portfolio risk. Now they're both certainly risks to the franchise of an investment advisor, and absolutely important from an investor's perspective.
As you'll be aware, over the last few years we've seen huge volatility in the markets, and this has driven changes in regulation. But one of the key areas that our industry will encounter over the next few years is the change in the attitude of investors, directors, investment managers, and service providers to the risk. Risk management is going to play a key component in our industry moving forward. The demand for more information, more timely information, transparent information, and how the risks undertaken lead to adequate and suitable rewards and returns is going to be crucial for investors and directors who take on a lot of responsibility in funds. We see risk broken down into two components. You have the day-to-day risk management, which is operational at both an operational and portfolio level, and it's driven by processes and procedures, by adequate and efficient IT systems. And likewise, you have the independent outsourcing of risk monitoring and evaluation, which is a growing area, where third-party service providers like Kinetic Partners provide a monitoring service. We're monitoring portfolios for adherence to regulation, to financial risks. We look at VAR analysis together with liquidity and counterparty risk. People who are buying that service range from directors of funds, range from portfolio managers themselves, together with investors. And we see that that is an area for huge growth in our industry in the future, in the next few years. We've also seen the changes of regulation coming, and the regulators are focusing in on monitoring the risks themselves. They're taking a more active part in the day-to-day risk management of a portfolio of assets, specifically around retail funds. But we're seeing through the European directive this stretch over into what we call alternative or hedge funds, and we think the industry has to prepare to provide these services and make sure the information is available, not only at a regulatory level, but also investors and other stakeholders within a fund or fund management business. This is a global industry, and the demands are going to be global, and the services that are going to be provided and demanded will be across all jurisdictions, be they New York, London, or Hong Kong.